Hello everyone, welcome to EduTap. I am Surbhi and this is Perspective 360 Degree, your one-stop solution for current affairs, descriptive writing and answer writing evaluation. If my audio is clear to you, if you can hear me properly and the video is in alignment with your screen, then kindly let me know in the chat section. I see a lot of messages from all of you, so kindly send a thumbs up if everything is clear. Good evening Shankara Rao, good evening Sejal. Neha, how to frame answers of phrase type question. I see phrase type questions are seen in your management part of syllabus. So for that, we conduct classes in the static portion of our course. Otherwise, what you can do is book a strategy call with me on this given phone number, and then we can discuss on that. All right. Thank you, Sejal. So let's proceed. Today's topic is India's debt. What are IMF's projections? IMF here means International Monetary Fund. So what has IMF said about India's debt? Debt means karza. Now, there are some news headlines which I want to share with you. The first one is from LiveMint that IMF's India debt projection forecast is misconstrued, says Finance Ministry. So something is not being liked by the government, by the Finance Ministry. Good evening, Adarsh. Okay. Then from Business Today as well, IMF's projection of government debt exceeding 100% of GDP by fiscal year 2028 is misconstrued. Again, this is a statement by Finance Ministry. And then the central government has said that please don't misconstrue IMF's debt outlook. And here I have a screenshot for you which talks about India's debt. This is a screenshot from website of International Monetary Fund. If you click at India, it says that India's debt to GDP ratio is 81.9%. So here, if I'm talking about India, as you can see, this is a snapshot from the website, official website of IMF, and this is the data for 2023. So that's your data for for today. Now, what is the relevance of this topic from our exam point of view? And it is relevant from various topics. For example, in your economic and social issues, under growth and development, there is a topic called national income and per capita income. And under the globalization aspect, there is a topic which directly talks about IMF and World Bank. And in general topics in finance syllabus of RBI Grade B, you have financial risk management. For NABARD Grade A, again, nature of Indian economy and institutional features, structural and institutional features of Indian economy, and IMF and World Bank, again from ESI section. For SEBI Grade A, again in the economics syllabus, you have national income, concepts and measurement, and for the English writing skills, again this can be of various uses to you. So the question that we will be discussing today is about debt to GDP ratio and what are the challenges involved. So provide a concise description of the debt to GDP ratio within the Indian context and highlight the associated challenges. Today's question is for 400 words only and it will give you 15 marks. See, one of the toppers at our institute, he like directly told that for 400 words he used to write around 300 words in the paper because he was not able to type as fast as much it was required. And for a 600 words question, he would actually write 400 to 450 words. And he could actually clear the RBI Grade B examination. So for you as well, this is the maximum word limit that is given. You don't have to cross 400 or 600 words, but you can definitely write lesser than the word limit. That is not going to, get any, you will not be penalized for this. It will not invite any penalty, but make sure that you're delivering complete information. So going back to the chat section, aspirant, good evening. Raj Chakravarti, good evening. Okay. So moving ahead, let's understand this question, and with the help of this question, we will understand the topic that we have at hand. So first of all, we need to be clear about the answer blueprint. We will divide our answer into three parts: introduction, main body, and conclusion. And talking about the introduction, we'll have to define public debt and debt to GDP ratio in our introduction itself. And the question says provide a concise description of the debt to GDP ratio within the Indian context. So we will be giving some Indian data, recent data with respect to India in our body part 1. But this body part is going to be very, very concise because the question is for 400 words only. And I can see here that the question has two parts to it. The first one is concise description of the debt to GDP ratio within Indian context. And the second part is highlight the associated challenges with debt to GDP ratio. What are the issues involved here? So that will be our body part 2, which will talk about challenges. And in the conclusion, we'll write a way forward for this debt to GDP ratio. What are the solutions there? Okay, so clearly and very smartly, we are going to use the report that the IMF has brought up, the data that IMF has given. Also, with regards to public debt, your economic survey and budgetary estimates, they become very important. Data from economic survey and budget would be available in almost a month's time. So gear up, make sure your other topics are complete beforehand, so that, you know, when you are bombarded with that much amount of editorials and information in February, so you have adequate time, and make sure that you complete basic concepts of economy beforehand, because that is going to play a major role in whether you are able to understand what economic survey is saying or what the finance minister is saying in the budgetary reports. Okay, so talking about introduction, here I have a snippet for you, a screenshot for you, and this is from April 2022, and it talks about understanding the sovereign debt crisis in Sri Lanka. So Sri Lanka was not able to pay back its debt. It ran into a sovereign debt crisis, that the entire country was under debt because the government was not able to pay the loans back of other countries or other international institutions. So there was a crisis in Sri Lanka, and IMF has said that by 2028, if the conditions in India are not good, then India might also have 100% debt. So are we talking about sovereign debt crisis in India? No, that is not the case. I'll show you why. Debt position of Government of India, and this is the recent estimate that we have as of 31st March 2023, and of 2024 also estimates have been brought out. Here I don't want you to focus on the digits, on the exact digits, whether these are crores, lakhs, whatever, just forget about that. Look at the debt here. Out of the total debt, most of the debt that India has is internal debt and other liabilities, and our external debt is very, very low. That means India cannot run into a sovereign debt crisis. We do not have to pay a lot of loans back to international agencies, other countries, or international institutions. We have internal debt in the form of, PF funds of people, or in the, bonds and debentures that Government of India raises. So it's like inside the country only. Okay. Now, here again, I want to show you some data. This is again a snippet from International Monetary Fund. If you look at it, you will be able to see that there are countries which have 100% or more debt. I will, let me just, enlarge this for you. Okay. So now, there are countries which have 100% or more debt, and these are marked in dark green color. And which are the countries which are in dark green color? United States of America. Countries in South America, they are in dark green color, which have debt to GDP ratio of 100% or more, and India is not a part of these countries. So a developed country like USA and countries like United Kingdom, which are developed countries in the Western world, they have debt to GDP ratio of 100% or even more. And the little light green part, that is like 75% to 100% debt to GDP ratio. These are again countries in South America and Pakistan. India is in a safe state because we are in the debt to GDP ratio of 50 to 75%. So that's not a bad state of situations, because many countries have more than even 100% of debt, and they're functioning just fine because they're also getting that much revenue on an yearly basis. The production or the GDP of the country is very, very good. Okay, so here we will be studying the issue in detail. I will be telling you how to write the introduction, what to explain here. But before that, I have some doubts coming. Let me take them. Yes, good evening, Harshal. Raj, see, that's a doubt which is not concerned with this video. Kindly call our support section for the same. Okay, so all right. Yes, Sejal, that's right. So now, to answer this question, first of all, you should explain what is public debt. To understand public debt means the debt that is owned by the government, the liability that the government has. Before that, you need to understand what is fiscal deficit. I'm sure that if you have studied economy, you must be aware about fiscal deficit. Just like, let's say, salary of a person in a hypothetical situation is 100 rupees, and the expenditure of that person for that month is 120 rupees, and that's a very hypothetical situation. So the deficit or the fiscal deficit for this person is going to be 20 rupees. That is 120 minus 100. Like what are the actual earnings of this person? That is minus 20 rupees. Okay. Similarly, for a country, if there is a difference between expenditure and revenue of government, the income of government and the expenditure that it is carrying out, that means there is a deficit which is known as fiscal deficit. So whatever extra money the government has spent or wants to spend, that money will have to be borrowed because the government does not have it. The government has not earned it. Okay, so that borrowed money is known as debt or public debt. So public debt, first of all, before going on to debt to GDP ratio, define what public debt is, then define debt to GDP ratio. That will be, a better approach. You can start with defining debt to GDP ratio itself, but start with defining public debt. So public debt refers to the total amount of money that a government owes to external creditors and domestic lenders. So external loans that it has taken and internal loans that it has taken. Now, what is debt to GDP ratio? Debt divided by GDP, okay, into 100. So whatever public debt is there divided by GDP of that country into 100. So, this should be as low as possible. If this is going to 100%, that means debt, when debt becomes equal to GDP, that means the money that government has taken in the form of loans is equal to GDP of the government. That means loans are very, very large in numbers. So this will all cut, it will end to 1 and it will become 100%. So this is what the IMF's projection was, that India's debt to GDP ratio is like 81.9%. Yes, that is very, very high. In like our personal lives, we do not want that kind of debt, we do not want that kind of debt for our country also. But many countries are doing very well even with 100% or even more than 100% of debt because they have the capability to pay it back. So IMF said that presently India's debt is around 81%, and it has reduced from 88%. Which was the debt to GDP ratio during the years when the entire world was struggling with COVID-19 pandemic. So yes, that's a good news that it has gone down. Why did it say that it might go to 100%? If some measures are not adhered to, and if there is a crisis, there is an economic crisis in the country, in like very bad situations, it might go to 100%. Otherwise, it will reduce in the long run or in the medium term. So, defining public debt a little more. It is the accumulation of borrowing by a government over time to cover budget deficits or finance various projects and programs. Wherever the government needs money, it takes some debt in the form of loans from external or internal, lenders, and then that is accrued as public debt. General government debt to GDP ratio measures the gross debt of the general government as a percentage of GDP. Okay, so debt upon GDP into 100. Obviously, you won't be able to type it there. And this debt to GDP ratio, it is a key indicator for the sustainability of government finance, of course. And what happens if a government cannot pay back its debt? Obviously, the government runs in crisis, the country runs in crisis. All the countries that were trading with it previously do not want to trade with it. So, the economy of the entire world does shaken up a bit depending upon what is the size of economy of that country which has run into a debt crisis. So, a healthy economy is one that produces and sells goods and services without accruing more debt. And if a portion of the country experiences a debt default, both local and foreign markets experience a financial panic, and that's why we do not want any sovereign debt crisis for any of the countries, especially the countries which are surrounding us or with which India has good trade relations. So there is a quote or there is a statement by IMF that a country can achieve sustainable external debt. It is possible if its future and current external debt service obligations are met in full. That means you're not passing it on to next year. If you're not passing the debt to next year, that we'll repay it next year or we'll be able to generate more revenue next year without accumulating more debt without compromising growth. Okay, so that's your introduction for the day. In the body part 1, we'll elaborate a little bit. We'll talk about India's data that IMF has given, and we'll also talk about that why our debt to GDP ratio has gone to that level? We'll just give two reasons there. So the combined debt of central and state governments stood at 81% of GDP in 2022 to 23. That's the latest data that we have, and which was down from 88% in 2020 to 2021. So this is the only data that you have to remember here. And IMF has also said that it might go even below 70% in the same period under favorable circumstances. So, what are the reasons for rise in indebtedness of India? First one was the COVID-19 pandemic, and the second one was the increase in interest rates. A steep rise in interest rates increased cost of servicing debt. That means the cost of repaying debt was increasing because of after the COVID-19 pandemic. So these two reasons have been given because have been ascribed to rising debt in the country or rising debt to GDP ratio in the country. Now, what are the challenges or issues involved with rising debt to GDP ratio? Okay. So, all right, Aarti, Gomati, good evening. So now what are the challenges involved? We'll be talking about the challenges under 7 or 8 heads. We have 8 heads here. So when it comes to India, there are few reasons due to which, government debt keeps on rising or it is not able to come down as much as we might want it to. So the first one is interest payments. Interest payments, they actually consume over 5% of GDP. That means the previous year loans that have been taken, they have to be returned and interest has to be paid on them. So that is around 5% of GDP is going to interest payments. And what is the percentage of GDP that is going to health and education? For education, it's around 2.5%, and for health, it is 1.5%. That's, approximate estimate. The latest ones will be available in the next year economic survey and budget. So, even if you add these two, they only combine to 4%. So more than the expenditure that is being carried out in your country for health and education, more than that is actually going for interest payments, and 25% of revenue receipts, they are also going for interest payments. So crowding out essential spending. What's that issue? Large interest payments, what they reduce? Your government cannot, invest that money in like green transition. For example, it cannot provide subsidies for electric vehicles as much as it would want to. Environmental priorities cannot be justified. Infrastructure and human development cannot occur. So that's the issue that is rising from here. The third one is state debt issues. That means there are many state governments whose debt is debt of one of the states. Where does it belong? It belongs to India, of course. So there are many states which have outstanding debt since the past many years, which also gets counted in the IMF's report. So specific states like Punjab and West Bengal, they have high debt ratios. The fourth one is limited counter-cyclical fiscal policy. Since the government is already paying a lot of money for debt repayments, so it restricts the government's ability to respond to economic shocks or downturns. And here I have an example that during the pandemic years, the debt went around to 89.6% debt to GDP ratio of the government. And why did we have to take more loans to to survive during the pandemic years? Why didn't the government have its own money? Because we were already having so much of debt to GDP ratio. We already had so much of outstanding public debt. So what does it reduce? First of all, good areas cannot receive adequate funding. The government cannot focus on these human development parameters or infrastructure. The government cannot focus there. Secondly, if there is any shock or there is any cyclical downturn, that recession is going on or anything else is going on, then the government, is in a state of is in a problematic state. So that's another issue. Then there is distorted debt market, because commercial banks and insurance companies, they have to buy government bonds, or there are certain regulations that the banks will have to buy a certain level of government bonds for these many years. For example, banks who have NPAs, they have to buy certain level of government bonds for a particular number of years. So now the bank's money is going where? In buying government bonds, because of regulations. So banks will not have free-flowing funds to, let's say, lend it to the manufacturing sector. They will be focusing just on their PSL norms. They will be focusing on profits, and important sectors like manufacturing, they will not be provided with adequate funds, which should have been the case. Then there are rating concerns which arise due to this. Whenever a sovereign credit rating is carried out, and there are international agencies, for example, Moody's ratings are launched or are made public year after year. So Agencies like such which carry out sovereign credit rating, they affect how much? They affect our reputation. They affect the reputation of our country, and they also impact how much trade other countries carry out with India, or how much trust do investors have on India. They just look at the credit rating agencies rankings. Okay, India has got this score, and so India is a good country in terms of economy, or India is a bad country, and India's rating is improving, but we deserve better. And the only reason, one of the reasons that we are not able to get a higher rating on is because we have high debt to GDP ratio. So India bats for sovereign rating upgrade in review with global agencies. For example, S&P, Fitch they rate India as triple B, and Moody's rates India as Baa3. Then can India expect a higher sovereign rating without reducing its fiscal deficit? This is from 3 days ago. This is from Mint, and it is public. You can refer to this article after watching this video. Kindly read it, that without reducing our fiscal deficit, can we get a higher sovereign rating? And can we improve how investors look at India, and how much money they send to India, and for how long does that money stay in India? Then there are future generations. The debt that is not paid this year, where it is going? It is going next year. And the debt, again, obviously it will not be paid next year also, because 1 year does not hold that much potential. So basically, then it is transferred to another year. The another year debts is transferred to another year, until unless structural changes occur in your economy which increase the size of your GDP. Your debt cannot be repaid back. It can be controlled, but it cannot be repaid back. So whose burden it is? It is the burden of future generations. So the next generation will bear the burden of today's borrowing. And this is a coverage from the Fortune. It says that this generation of politicians has killed fiscal responsibility. But millennials and Gen Zers will be the ones who pay the price. So we talk about sustainable growth. We talk about sustainability when it comes to environment or resource use. Here, sustainability of debt is also important, or sustainable fiscal responsibility, that is also important, and that is very much under question. Then PR Newswire, this is from 2022. It says, passing the buck, how the national debt burdens future generations. You can get back to it, get back to this article and read about this. Such articles, they are, evergreen. They never get old. If the debt situation in the country was very similar that time as it is today, so that means this article is going to give you a lot of insight. So don't worry about the dates in such cases. These are evergreen articles. Then finally, you have the election cycles. So Lok Sabha elections are upcoming next year. Many state governments will be also having elections. Many legislative assemblies will have elections next year. So whenever elections come up, freebies are given, a lot of expenditure is carried out, a lot of jobs are given, a lot of, let's say, laptops or gadgets are distributed across the state or across the country. Many freebies are given, and what happens is a lot of expenditure is carried out, and that money is not available with the government. So where does that money come from? Obviously, it is actually the debt, or it is the loan that the future government will have to pay back. The government that comes in power will have to pay back this debt or loan. So whenever elections are there, the debt to GDP ratio that rises, which has been seen. The economics of election freebies. So that's a snapshot for you, and that was covered by Business Today 5 days ago. So everybody is worried about the elections because India's debt is under question. Now, in the conclusion, there has to be two things. First of all, give a way forward. In the way forward, we don't expect you to write in detail like what the government should do, but at least the heading should be important, and with the help of commas, you can give solutions. For example, there are advices of Finance Commission or recommendations of Finance Commission. Then there is Fiscal Responsibility and Budgetary Management Act, that how should central government and state governments control the fiscal deficit year after year or on an annual basis. So that should be adhered to. Those recommendations should be followed. What else can be done? Kindly let me know in the chat section what else can be done to control public debt or to check public debt. So follow Finance Commission recommendations. The second one is enhanced tax collection. So yes, Indian citizens are already not happy with the high tax rates or whatever tax rates are present. They're not happy with it. But tax administration can be improved, and tax to GDP ratio can be improved. Disinvestment can be carried out. Government should only, own enterprises which are actually giving profit to the government. Other enterprises which are not giving profit to the government, they are like they are important till a certain age because they also contribute to employment in the country in the form of government jobs with PSUs. But beyond a certain point, the government should have a plan, gradual plan of disinvestment from such industries, or plan out strategies to make them profit making enterprises. Then limit subsidies, direct cash, subsidizing goods and services, that is not proving to be very efficient. So direct cash transfers, they are the way to go. They save pilferage also, so it benefits the beneficiaries and the government both. Then enforcing fiscal discipline. Here you talk about your financial responsibility and budgetary management rules under the FRBM Act. Then reassessing state roles. Government should avoid redundant or unnecessary expensive and avoid competitive market involvement. And you can talk about election freebies here. Definitely do that. Now, in the way forward, kindly talk about IMF's reports that yes, India's public debt, it is not expected to fall down in the medium term. It is not expected to come down, but IMF has said that India's debt is very much sustainable, meaning that it is expected to meet its current and future debt obligations without default. So on this note, you can end your answer. This is your solution or way forward, and this is your concluding line. Make sure that both of these are in the same paragraph only, and your word limit your answer does not exceed the word limit of 400 words. I'm displaying the question again. This question is for 10 marks. Kindly excuse me. You will be awarded 10 marks for it. So this is not for 15 marks. That's an editing problem. You will be awarded 10 marks for it for writing 400 words. So kindly post your answers in the next 48 hours. I know it's New Year's time, so you want to maybe relax a bit, you want to plan or journal for the future, that what are your aspirations for the next year. I understand you need time for yourself, but kindly do not break this cycle. Writing an answer will not take more than 1 to 1.5 hours if you're just starting out, and for old aspirants it should not take even that much long. So kindly download the PDF from our Telegram channel for this discussion tomorrow morning. The Telegram channel's link is there in the description, and in the next 48 hours, that is by Sunday 5 p.m. kindly post your answers. Do that tomorrow itself so that your 31st December is free for celebration and for your personal time and personal goals. Okay, so do that at the earliest. Don't delay it much. And take care. I'll see you on 1st January. On 1st January, you will be receiving a recorded video, and the topic would be monetary policy. We'll keep it simple. Monetary policy is an old topic. Monetary Policy Committee just had a meeting in December. So the topic is going to be old, and it is going to pay you off very much, but that will be a recorded video session that you will have. Okay, so take care. Happy New Year to all of you, and all the very best. Post your answers on time. Subscribe to our channel. Contact us at this email ID for any feedback that you have for Perspective 360. We have 47th lecture this is. We are close to half a century, and you can contact us at this number for any doubts that you have. You can also book a strategy call with us at this number. Take care, all the very best, and I'll see you soon. Okay, ma'am. Firstly, thanks a lot for providing free evaluation on our answers. It helps a lot. But one request, can you just pin the answer which gets the highest marks in comment section for us? Harshil, the problem with pinning the answer is that people, they're posting even till 4:59 p.m. So by the time I come out with another video, you have already posted your answer. So that can be done later. And, but before that, it can't be done because we get a lot of responses even till 4:59 p.m. So you're welcome, Mayur. Happy New Year, Sejal. Aman, the government has been criticizing Western institutions for, skewing all the rankings in their favor. That's never write anything very negative in your exam. That does not reflect a good personality. Plus, you do not know what the criterion of examiner is. Probably the examiner, being an economist, she feels that, the Western institutions ranking is right. So based on the newspapers, we cannot criticize anything. We can just put out the facts there. Okay, not opinions. Ma'am, is it better to have 7-8 points with little explanation, or 4-5 points with more explanation on the points? both approaches are good. Both approaches are good, depends on how much explanation that you have. For example, I'll show you today's answer. Today's answer has like very less explanation, but it has 8 points. So if you look at all these points, these have just one line of explanation, but number of points is 8. So if you can combine them, obviously the explanation will be longer. So both the approaches are good as long as you're writing in points, okay? So don't worry about it. Okay, so I think we are done with the doubts. So I'll see you on Monday with a recorded lecture. Till then, take care. All the very best.